Good evening, everybody. Hope you're doing well. We're going to start in a few minutes, so feel free to get beverages of your choice. Good evening to all. Okay. How are you doing, Miss Talisha?
How are you?
I'm pretty good, thank you.
Hey, Eric.
Hey, everybody. How y'all doing? Hey, Felicia. How you
Good.
doing?
How are you?
Good, good.
We are talking about Eric's favorite topic tonight. So I'm glad that he's here because we're going to let Eric, I have some articles to read, but we're going to let Eric take it away because he's going to really break it down for us.
Yeah, okay.
So we are officially live on Facebook. Of course, we are live here in Zoom as well. We'll give people just another 2 minutes to come in. And in the meantime, I'll start off with saying welcome to Blockchain Chat. You know, if it's Wednesday, it's Blockchain Day. We're all about the business, all about the money, all about the Benjamins here. If you want to get a blockchain job, you want to start a blockchain-based business, you want to invest in the blockchain, whether you're investing time or money in a project, and you want to be a part of this $3.1 trillion industry, you are in the right place. I'm hoping that tonight can be a little bit interactive as well. Tonight is about blockchain and real estate, and the bigger discussion we're going to have is about tokenization. And anybody want to put in the chat how many trillions of dollars is expected to be tokenized by 2027 per year? How big is the tokenization industry going to be on an annual basis? We'll open up the chat here. We've got some people already responding. Let's open up the chat here, and then we'll also open up Facebook as well. See what people have to say there. We've got 3 trillion, we've got 4 trillion. What do people think? How many trillions of dollars do people believe is going to flow through tokenization by 2027? So we got 3 trillion, we got 4 trillion. Hello, everybody on Facebook as well. So the question is, how many trillions of dollars do you think is expected to flow through tokenization by 2027? That's across all tokenized assets. We got 3 trillion, we've got 4 trillion. I can tell you that you are very, very, very low. We're going to talk about that tonight. We're going to talk about the different things that are expected to be tokenized. I see Richard here has a revised number. Percy's saying Richard threw me off. Look, Percy, you got to stand on your own 2 feet, brother.
Yeah, you can't be swayed. This is not peer pressure. No.
You cannot be swayed around here. You got to stand in your own, right? So we're going to talk about how big the tokenization industry is expected to be. We're going to break down a little bit about tokenization. And this topic came up because I read a couple of articles with regards to tokenization in real estate this week, or blockchain in real estate this week. And I thought it would be a great idea for us to have that conversation. Last week, we discussed smart contracts. and we discuss blockchain security. And if you have been following me any period of time, I always say pick a major, right? So for anybody who is new, what's a major? In college, freshman, sophomore year, you usually take general studies, which blockchainstudies.tech has some general studies classes. Blockchain 101, the basics with regards to different niches that are available. And then in junior year of college, you usually pick a major, meaning pick a niche. And we had the conversation a couple of weeks ago about that, about if you want to be a blockchain consultant in 2021, how much money do you want to make? And one of the things was always pick a major. And somebody asked, well, what if I don't have an area of specialization? And I have said there are two areas that I think are really going to be big. Does anyone know what they are? Two areas of blockchain that I think are really going to be big. If you don't have a natural major, meaning a natural industry that you've been in for 20 years and you know that industry inside and out, or if you're, a little bit like me, you just want to do something different, period. What are the two areas of blockchain that I have said you should consider going into? Does anyone know? Nobody?
A group here tonight.
Thinking. Everybody's thinking. Nobody knows, huh?
Yeah.
Well, then I'll throw an easier question. I'll get Percy saying real estate. No, but close. Tokenization of assets or smart contracts. And I'll throw a third one in there for Daniel Addison, and that is security. Mm-hmm. So if you do not currently have a major, check out one of those three.
Yeah, I agree.
Tokenization of assets, smart contracts, or security. And you can do all sorts of things in any of those areas. You can do anything from coding to project management to sales. And y'all know I'm going to convert somebody to getting into blockchain sales.
Yeah, I'm going to say that I'm going to throw in consulting is the easiest way.
Mm-hmm.
To me, that's the basic, because every industry is going to have to know how it works and what does it take to work. And that to me is where the consulting and support comes into. You're literally doing customer support just on the front end instead of the back end.
Yeah, and I mean, for me, customer support can be a lot of different things. It could be anything from education. You need to educate the C-suite, right? And educating the CFO is different from educating the human resources director, mm-hmm. right? Or the, chief operating officer.
Yeah,
or CIO, right? So you can get hyper niche with just, I go in and I talk to chief financial officers in the healthcare industry about blockchain security. And then you think, oh, that's a super niche thing. Well, guess what? You probably would get paid thousands of dollars an hour because you know how to talk on a financial level to a healthcare professional, right? So you don't necessarily have to choose everything, but tonight is going to be about tokenization. We're going to do a bit of an intro. I'm going to let Eric loose on us. Talisha's going to join in. We're going to have a good time. If anyone else wants to get on the panel, just don't raise your hand. Put it in the chat. Cherie, I want to come on the panel. I have something to say. Richard is saying, let Eric loose. So, wait a second.
A wild animal there.
Be careful. Be careful what you
really,
wish for.
That's good. That's right. Yeah.
Good, because once Eric gets loose, that's it. All righty then. So I'm going to share a couple of articles, and then we'll have a conversation. Then I'll share a couple more articles. We'll have more conversation. Tonight is always, of course, about give and take amongst all of us. I do have one more announcement. I'm sorry, before we start. Next Monday is October 12th at 7:30 p.m. Eastern Time. All Inner Circle members, we have a special session. It is a virtual incubator mastermind. Dr. Keisha is going to be leading it. And if you have ideas around blockchain, you have something that you're working on, you just want to share ideas around blockchain, kind of in an open session, different projects you're thinking about, projects you're working on. Y'all know I'm about the business of blockchain. So how do you push, for all of you that want to make $100,000, $200,000 next year, this is a time for you to come and kind of really like, let's have a mastermind session around your projects, your consulting companies, and how you can actually make that happen. So it's next Monday, October 12th at 7:30 Eastern Time. And I will be sure to put it in Flock. I'll be sure to send you the Zoom link early enough, but please put it on your calendars as well. So if you plan to attend, put a 1 in the chat for me. If you plan to attend, put a 1 in the chat. Y'all know I like my audience participation as well. Fantastic. It should be a really good time, great conversation. All righty then. Let us talk about tokenization. Can everyone see my screen?
Mhm.
Man.
Does it need to be, it probably needs to
Yeah,
be bigger.
it
Let me
needs
just make it bigger
A
here.
little small.
There we go.
There we go. Much better.
That's good. All right, perfect. Okay, everybody. So tokenization is disrupting the financial industry. People predict by 2027 it's going to be how much? Put it in the chat. I've got it highlighted here. How many dollars is going to go in and through tokenization? And I believe this is going to be an annual number. Actually, I know it is. $27 trillion. So people who put 3, 4, 7 trillion, when I said you were low, it's $27 trillion. So hopefully everyone's ears is perked up here. So what is asset tokenization? It is the process of creating tokens that stand in for a specific fraction of the value of an asset. Rather than buying shares in a company that owns the asset, it's now possible for investors to purchase direct fractional ownership of the asset. That has several major advantages. Why would people tokenize assets? Assets are tokenized to allow multiple purchasers access to an asset whose price would otherwise be unaffordably high. So imagine this. There is a painting, Les Films d'Alger by Pablo Picasso.
Very good.
Ah. I know how to throw that accent in there. It sold in 2015 for $179 million. Finding another buyer with that kind of money to purchase it directly would be difficult. However, the potential market for those types of high net worth investors, that's what HNWI stands for. The potential market of high net worth investors like this is pretty small. Alternatively, imagine if you own an apartment and the value of it is $100,000. And I'm going to change this to a house, right? You own a house, value of it is $100,000. You imagine you would want to make $10,000 quickly. You cannot sell 1/10 of a house. There's no simple practical way to handle this without involving banks or other firms whose fees will eat into the modest sum you aim to realize. This is the same problem as our Picasso, just the other side of the coin. The value of assets is real, but they are not portable, can't be easily traded, and cannot be broken down into parts. The tokenization solution is to sell shares of ownership in the asset, not as share certificates but as fungible tokens that can be exchanged, bought, and sold. The only way to do this is on the blockchain. On the blockchain, it's possible to create tokens that represent anything. These tokens can then be bought and subsequently used as coins, traded on exchanges instantly for other assets, and immediately transmitting their value to the new purchaser. This is an extremely different process from buying and selling share certificates, which requires third-party oversight and is both time-consuming and complex in comparison. And for those of you who are part of the inner circle, the real business of blockchain, this is a prime example of the decentralization that Talisha and Eric has been guiding us through. So there's a little bit more down here. Asset tokenization use cases. The three main use cases for tokenization are fungibility, divisibility, and responsiveness. Fungibility is the capacity to be traded. Money is fungible. Gems are somewhat fungible. A property portfolio is very infungible. Then there's divisibility. Divisibility is obvious. Can the asset be divided and sold or traded in separate portions? Gold and cash can, but art cannot. What's the 1% value of the Mona Lisa, for example? Finally, there's responsiveness. In markets where the physical assets are typically held apart from the market and deals are made on futures, securities, or deeds, how quickly can this be done? In cases where the proof of ownership relies on physical paperwork in multiple locations around the world, the answer is usually too slow to be satisfactory. Thus, there are three major markets which tokenization is likely to enter first: real estate, art, and precious metals. So that's our first article. Our second article here is a little old. It's from 2018, but it's still saying the $24 trillion. This is from Hacker Noon. Okay. As the internet needed, make this a bit bigger for everybody. There we go. As the internet needed three development stages to unfold the Web 2.0, including companies like Facebook and Twitter, we expect the blockchain tech blockchain tech to take a similar journey to a tokenized asset market of about $24 trillion by 2027. Research and surveys from institutions such as the World Economic Forum, Deloitte, or McKinsey project that up to 10% of the global gross domestic product will be stored and transacted with the help of blockchain tech by 2025 to 2027. This tipping point in mind, we ran a market simulation to determine the potential market size of the global tokenized market using a conservative approach. For estimation purposes, we only looked at financial assets as well as real estate assets clustered into listed equity, unlisted equity, other equity, bonds, home equity, as well as other financial assets. We project the tokenized asset market of 24 trillion. This does not include, this does not include currently not measured asset classes or unidentified tokenized use cases of intangible assets such as patents and usage rights, where we expect significant innovation and growth. Have a little bit more here, I think. I thought I did. Okay, no, I don't. Okay, so there are several things to note within these two articles. Number one is, I'm going to come back here. They, in this article, just did a great overview of some examples. So one of the things we didn't talk about was marketing and communications, and being able to explain to people in the real estate industry, people in precious metals, people in these other industries, how tokenization is going to affect them. how it could be great for them. These are, of course, some great examples so that people can understand, and just regular people can understand as well. The other thing that I think these articles did was showed some of the first use cases and where some of the money is going to be in 2021 to 2025, and where you can actually ride the wave. So I'm going to stop my screen share here. We have two more articles, but I want to give Eric and Talisha a chance to weigh in on these two articles.
Talisha,
You're on mute.
Oh, am I on mute?
No. Can you hear me now?
Mm-hmm.
Okay. So I think we just went through this in the business of blockchain. We talked about the 3 exact reasons why to use tokenization, and these were them. It described it a little differently, but they were all about, again, where and why you would use them. And this becomes very evident very clearly, like when you need something to be liquid, or as they say, fungible. That is the value exchange that we talked about initially, where it's a value for value, but you couldn't extract that if you can't have it in a liquid form. And then there's other aspects to it. I think like the art is a very good example, I think, because art has value that's kind of subjective, but also objective as well, because it has to be appraised. But depending on where and why and who and what happens to it, there's all these kind of things that happen with art. So art has the ability to kind of maneuver through all 3 of them, in the sense of, yes, that it is obviously divisible in the sense that you could have a portion of it. It really is fungible in the sense that if I pay you for it, I get to keep the art, or, we have that exchange. But I think the other aspect is that what does it mean? There's another value to art, just like we talked about, where we have certain things that have social impact that all of a sudden, just, you have a piece of art that was nothing. It was graffiti 10 seconds ago. And then something happens to it on a marketing campaign, and all of a sudden it's worth a whole lot of money. So we see how that value has changed and kind of flows and ebbs through those processes. And that's why you couldn't have any other way but through a token to capture that value in each of its forms as it evolves dynamically. I think that's a true essence of a use case, where you could see it in so many angles and truly the facets that it can come through. That's the amazing part of tokenization.
I'm just going to say, like, Talisha, you're absolutely right, because we did cover this. We did. We just like it's just like we talked. We just did this. And that's the thing, is whenever you start looking at a digital representation of, it could be any asset. This whatever any asset. It could be an asset in the physical world, but there's also digitally native assets too that only exist within the internet themselves. And we look at Ethereum and Bitcoin. Well, guess what? There is no physical representation of either one of those or any of these crypto native assets. But I look at it, and it's funny that they mentioned precious metals. And we look at this, where especially now where we see the prices of gold has hit all-time highs, and then it's dipped down a little bit. But thinking about using gold in terms of commerce, it's a much more cumbersome process, like, how do I chip off a piece of gold or something like that, then have someone to go and weigh it, and then they got to go and test it. But then when we start looking at, like, for instance, like a Paxos gold, which is now tokenized gold, and we look at that now, of that being able to be utilized, the fungibility now. But now we have the divisibility of a physical bar of gold, but now we also have the fungibility now of, hey, you know what? I'm going to take it. I'm going to use this. I'm going to send this payment out for whatever the case is, to buy a house or to buy some other kind of object or something like that. Now we're able to, just do things now in the digital world that previously were, either very difficult or completely unheard of, doing those in the physical world. I know, like, just recently, BlockFi, now they're allowing you to go and to take your Paxos Gold tokens, which are backed by the, Paxos is audited, and the gold, each token represents an actual physical amount of gold that it says it represents. And if you want to trade in your tokens to actually get the physical gold, they'll send it to you. But you look at companies now like BlockFi. They're able to do something that was never heard of before, and that is, you can go and you can stick your gold tokens and actually receive compounding interest on your gold, of just being able to do that. So these are the sort of things that I look at, and I get so excited about tokenization, because it's allowing us then to leverage technology to do things in a much seamless way, quicker way, and to be able to really deploy it on our own behalf. So I don't want to go on too long, but that's my short spiel.
Yeah, the other thing that with your example about the gold is also the responsiveness as well. So, the ability to prove ownership at the drop of a hat with blockchain, which is not something that is as trustworthy, let's just say, especially outside of the United States and some other countries. When we start, for example, talking about buying land in certain parts of Africa, or things like that, then having that trust within a blockchain and knowing, okay, these are the records, and they've not been tampered with and things like that, we are going to also be able to do certain things globally as well. There may be, for example, tokenization of assets or tokenizing diamond mines, and things we may have never even thought of before as investments or as businesses, or just all sorts of use cases for tokenization. And one of the things we've talked about previously, and this is again, people who want to make money in the blockchain industry, we had people talking about want to make 100,000, et cetera, in the blockchain industry. They mentioned in the first article about Web 2.0 and needing Twitter and Facebook in order for Web 2.0 to be fully realized. And it got me to thinking about, okay, but what are all of the other ancillary businesses that came because of, let's just say, Facebook's existence, right? On-ramp and off-ramp. What is on-ramp? At the very beginning, people needed help setting up a profile, right? They needed help. Today, they need help setting up their ads, setting up their Facebook groups, engaging people, all sorts of stuff. Like, some of you may take some of those things for granted, but 5 years ago, for example, there were people who made millions of dollars doing these types of things. I believe within blockchain, we're going to have the same thing. And some of you are very, very well positioned to help people just get on the on-ramp. You don't have to create the next unicorn. You don't have to be a part of, the next Tesla or something like that, right? But if you can just help people get on the on-ramp and figure out how to use tokenization, and if someone is really nervous about tokenizing their house because they've never done it before, but you have worked in that system before, people will pay you for those things just to help guide them through the process. So there's a lot of opportunity that's going to be forthcoming from this. And I just wanted to say, think about the on-ramp, think about the off-ramp. Somebody decides, hey, I've got the cash. I want to get that 10th of my apartment back, right? How do people transact that so that they can get, reclaim 100% ownership of their apartment or their house? The off-ramp, people are going to need help with that too.
So I think that's corresponding businesses. You have the retail and the real estate business. As we just saw, I posted an article a few weeks back in the 10K group with regard to a gentleman who has a building in Columbus, Ohio, where their payment of rent is now on the blockchain, and they get to own so much of their own apartment. So again, something that somebody may be really good at real estate, but have no idea of how to add a secondary stream of income to it. You can help them with that. So that's, again, your job is not to secure the property or whatever. It's just like, hey, let me help you tokenize it, or let me help you get to this other level of a revenue stream for you.
Right.
So there's always these things. And I think the example of Facebook is really good, because we always look at what happened. Facebook took over, but then it had to be supported. Everything about it, for its generated of the revenue that it had to be supported somehow. You just couldn't just get on and do it. And now just the simple, again, that single sign-on changes a whole lot of things. And that's just one single app. But it allows you to log into how many things that you have, like, oh, just log in with Facebook, log in with Google. Those things, that's an on-ramp that most people don't have any idea what's happening. All you're doing, and this is what Cherie always says, creating the toll. You just created that single thing, just how to sign in. Okay, you used your key. Now I can populate you into all these different places just because you used that one single key. And I just happen to have the toll to get you past it.
Absolutely.
That in itself is whoever creates that's a billion-dollar business, because that's what's going to happen. You don't want to remember your private key here and your private key for that, and you're going to want that single thing, but you want it to be encrypted in different ways and give you that same access for all of the products that you may be using. Yeah. And that's coming, because your tokens are going to be able to be kind of swapped in between all of these things. So that these are just those small, what I consider, they're not even ancillary, they're just support. They truly are just basic support mechanisms for allowing you to use the product without having to go through, the major hoops that need to happen.
Yeah, absolutely. So I'm going to switch to our second set of articles here. I've got 2 more articles, and then we're going to bounce back and let the 2 of you share your thoughts with regards to this. So, okay, let me make this bigger for everybody. So this was a story that just came out about a company called Propy, a blockchain verified platform for selling houses, raises funding from Tim Draper. Tim Draper is apparently some really big venture capitalist out there. And I know of him, so yes, but he's a real guy. For several years, blockchain tech has been touted as a way to verify the sale of property. And so entrepreneurs busily began the process of trying to create a startup that could complete a property deal on the blockchain. One that stood out from the start was Propy, started by Natalia Karayaneva, an experienced real-world property developer who had subsequently joined the blockchain world. Propy's other co-founder is Denitsa, and I'm not going to try that name. Propy's platform uses blockchain tech to, it says, simplify the home purchasing experience and eliminate fraudulent transactions. The idea is to close a traditional real estate deal entirely online. Thus, the offer, signed purchase agreements with DocuSign, secure wire payments, and title deeds are all taken care of. Propy claims its platforms saves 10 hours of paperwork per transaction. My vision for Propy is to bring self-driving real estate transactions to the world, with all of the logistics seamlessly executed on the back end. Our platform offers a terminal to observe transactions in real time, making the process transparent for real estate executives, title companies, home builders, buyers, and REITs. With this new investment, we are excited to bring much needed change to the industry, satisfy consumers, and empower real estate professionals all over the world. Propy, it could be used by mainstream users from day one, as it's able to process wire transfers via integration with a money transmitter connected to 70 banks. They're saying we do not replace lawyers, and I think this is very important. We do not replace lawyers, but rather help them. Closing attorneys share documents with consumers and agents via Propy. With DocuSign integrated, they can sign the documents on Propy and all parties get notified. In the US, agents have ready forms in property to fill out, and they do not need lawyers in a transaction at all. Proppy has an enterprise play going on here as well. Its platform can provide the back office system to real estate enterprises with real-time transaction reports and automated compliance. According to one survey, almost 1/5 of millennials have now thought of buying a home because of the lockdowns, meaning that many will be looking for an easy way to transact, especially if it has the ease of use Proppy has. This last paragraph got me thinking, wow, in about 5 years, potentially, somebody could purchase a house totally from their mobile phone.
Yep.
Imagine that, like, yeah, the 60-year-olds would, they say, no, I want to go to the title office. But if you've got, they say here millennials, but let's say Gen Z, for example, they get to a point where they want to buy property, they could buy it and do the entire transaction completely from their phone. Not having to talk to a lawyer, not having to talk to the realtor, not having to talk to anybody. A couple of other things they said is, again, we do not replace lawyers. So some people may feel like, or some lawyers may feel like they're being replaced. That's not true. Another thing that I thought is with probate, for example, this could be really huge, not with just purchasing property, but probate issues, So somebody here may decide, hey, you know what? I want to tackle that as my niche, dealing with real estate. Go ahead, Talisha. I'm
I
sorry.
would say foreclosures is another one. How to put that information available on the blockchain. Somebody has to get that information and collect it and then put it there. So that's always, again, just moving information from one place to another is also a strong job.
Yeah. Another thing that Tawana always talks about is the auditing as well. Even though there's automated compliance, there will need to be auditing done of these systems. So, there's a lot of opportunity here. I'm going to share this this is just super small here. This is a company called We Invest that leverages blockchain tech to increase its real estate funds value proposition. So We Invest Capital Partners has selected Tokenization Solution to tokenize the first real estate fund in Luxembourg. Tokenization Solutions will provide the end-to-end digital services needed for the compliant onboarding and management of investors. We Invest will utilize those services to issue and manage its premium real estate fund, improving the asset's transferability. Tokenization Solutions facilitates the digital onboarding and subscription of investors in compliance with the We Invest investment memorandum. It further improves the management of the fund registry by creating a digital proof of ownership for each investor's position. The proof of ownership can be used in Tokenize Billboard to list an investor's intention to buy or sell to reduce the illiquidity costs associated with private market instruments. The token will also be available for collateralization on DeFi platforms. I wanted to share this because now we're starting to see various use cases, and we will continue to do so. So though, you had one, which is Proppy, which is the platform and all of the different ways that they're working with, the different parties. And then you have We Invest, which is dealing most likely with accredited investors, institutional investors, and they are dealing with the illiquidity of their fund, for example. I think that's, the primary thing that they're dealing with. How many people are setting up funds, not only huge, $100 million plus funds, but you see a lot of people setting up $3 million funds, $5 million funds, $20 million funds, and a lot of times they're illiquid. Well, now you've discovered what? Another opportunity here. So Talisha, Eric, I'm going to let you two talk.
I'm going to say refinancing is what that article made me think of immediately, because that's the point of not only creating the fund, but again, giving somebody their property. And we do that often through that refinance aspect to it. Now you wouldn't really need to refinance if you had the tokenization portion of your home or whatever it is, because now you can exchange that. So that I was thinking, like, how interesting will that business survive? Because that really puts it out of business to me. That, because it makes it archaic to have to refinance something that you already have or that you've paid something into, because every time you've paid something into, the larger or more valuable the token is. So you could actually, again, see the divisibility in that by incrementally growing it by every payment that you've made, every mortgage, or doing whatever. And again, I think also coming into having an investor look at your property. What if you're at Airbnb? Now you may want to, basically hold your property as an asset and have people invest in it. If you live in one of those areas where it's highly, it's used that way, it's a secondary home. Now you can have investors invest in their bits and pieces to give you, again, some more just viability of your own property. And the property exists and it will never be moved. But now you have transitions of owners and of funding to buy these pieces of property. So I think there's a lot of commingling going on. This makes you think of, like, what could you possibly do if I wanted to buy a beachfront property in Miami, and I don't want to live there, but I want something there, and maybe I want to stay, and maybe I want some money, but then I want to buy some art because I just want some art, and now I want to buy a car. One piece of property could facilitate all of that for you and have investors and different things.
Totally. And you know what, Talisha, too, you can embed so many things within the asset itself, within the token itself, right? And that's one of the things too that I think that's why it's so exciting, because you start looking at that, you start going, wow, you know what? Yeah, we could have it where, who knows? You know what I mean? Where you go and you visit a property on a certain period of time, or you go and you rent it out a certain period of time. Other time it's already known that it's going to be you there or something like that. It's so many different ways in which you can build so many different incentives for yourself, like just within the token itself. I do, like Sheree, do you mind put up that last article again, the tokening? It's something really jumped out at me. Okay, yeah, right there. All right, that last sentence, the token will also be available for collateralization on DeFi platforms. Okay, that's huge. And I don't know, I don't know, I know what that means to me, but I would like to see what that means to them. Because when I start looking at that— What does it mean
to you?
Oh, because for me, I'm like, oh, well, wait a minute. If that's the case, first of all, here's a couple things. One, and you mentioned this earlier, and I'm pretty sure, absolutely, this is probably only going to be for accredited investors. Mm-hmm. However, if they start going in where it's going to be collateralized on DeFi platforms, if I'm looking at, Uniswap or SushiSwap or HoneySwap, or now MetaMask now is allowing you to swap. Okay, if I am then able to take this asset, I can then trade it for whatever else that I want. Then I could trade it for Bitcoin. I could trade it for Ethereum. And here's the thing: if you go to DeFi platforms, there's no KYC on DeFi platforms. It's just me hooking up my Coinbase wallet, my Trust wallet, or my MetaMask or my Ledger, then to the platform itself, and then I'm able to go on and to swap it out for whatever other asset that I'm looking to buy. So I'm not sure exactly. That's why I'm saying I'm not sure if that's what they're saying. I mean, they said DeFi platforms, so I'm going to take them at their word. I'm sure they would, maybe flesh this out a little bit more to say, okay, but there is going to be some degree of KYC component on this.
Well, it may not be. I mean, this is Luxembourg as well, so I mean, it may depend on. I would also not be surprised if there are lobbyists in the United States. So currently there are lobbyists in the United States that are working to change the definition, for example, of accredited investors both of you know, I'm saying this more so to the other participants here, there's a lot of the banks are becoming less and less influential with regards to money and how money circulates. And as you two were talking, I pulled this up here, for example. This is some crowdfunding statistics here. I hadn't had a chance to totally go through it, but right now, there's about $17.2 billion generated through crowdfunding in North America. By 2030, the global crowdfunding market is expected to grow $300 billion. The point that I wanted to show with this is the world is changing from everyone going to the banks in order to get funded to more peer-to-peer funding is what we're going to be seeing over the next 10 years. So because of that, tokenization has to make sense. If you have people who are, I'm investing, for example, in something, and a year from now, I want to get out of it, I can't be involved in a whole bunch of the liquid investments because I don't know what percentage of people are high net worth, but probably let's say 10%, right? You got to get the other 90% involved in this market for it to work. And the only way to do that is through blockchain and DeFi and being able to have liquid assets, those tokens that you're able to openly exchange at any point. So even with the on-ramp and off-ramp, it's not just an on-ramp with regards to people putting, for example, their property or a tenth of their property onto the chain. It's also the on-ramp of, hey, I've got $1,000 I want to invest. I want to even take a look at what's available out here and how do I find it? And, for some of you, you're financial planners. How do you build a portfolio with all of these tokens that are available? Like when we say that there's going to be new industries, Talisha talks about it all the time, new jobs, new industries created because of this, there will be. And it is a chance for us, talking about as a Black blockchain consultant, as Black people to really shine, in this. We could dominate a certain part of the market. So I know, Eric, I cut you off there, but I really wanted to make sure that I included that in my statement.
No, you're absolutely right. And there's a couple of things too I think about. Number one, like one of the things, because you did mention the banks, it's kind of funny to them right now because, now we already see that the banks now are, now they're going to actually be able to custody your crypto, which is interesting because you look at that, and I don't know if anyone has, went to buy a house or get a loan from the bank or something like that. And have they, and I would love to see if anyone mentioned it in the chat. Have you done that, and have you mentioned your crypto assets, and have they factored that into, whether you get approved for a loan or not?
That's interesting.
Yeah, like every other time that I've heard about it, it was like that was a negative. Like, okay, well, we're definitely not gonna give you the loan now. You own Bitcoin. Like I heard, but now I think that kind of mentality from them is probably going to have to go away, like fairly quickly.
It will have to go away. So 2 years ago, when we started BCI, Blockchain Consortium International, we were turned down by 2 banks to open an account because we have blockchain. Yeah. And, we were trying to explain to the people, we're not selling crypto, we're not doing anything like that. They did not care. They saw blockchain in our name and they were like, no. 2 years from now, probably now you could do it. But 2 years from now, 3 years from now, trust me, you come in there and say, I do blockchain consulting, and because people were changing the names of their companies because they didn't want to get denied a bank account,
And also, it's not crypto anymore. So this is where the tokenization, it's now representation of something else. It has different values. So it's not a digital asset. It is not a crypto. It is a token. And with that means you have property. You have gold, you have diamonds, you have art. So now it has to change because now they don't even know what it's backed too. And I think that's one of those things also where the secondary market has to change in the sense that it has to be viable. Maybe I want to buy a house with diamonds. Maybe I want to, maybe I want to buy a car, the original Bitcoin was bought 10 pizzas. We have this weird exchange in the sense of like, we always think it has to be unilateral. At this point, there's multifaceted ways with a token because the value switches depending on what you're doing and who you're dealing the transaction with. So at one point you could say I'm buying land with land. What if I want the house, but I now want a house in California and I don't want the what if it's just a swap? What if it's that instead of like, oh, I got to give you cash and we got to go through this escrow and then we got to go through like all of that. It's just that simple. And I think that's where the mindset has to shift because the value, you've proven the value. Now you can't argue with me about what the form is.
That's a good point. That's
irrelevant to you at this point. It's like, I have this much value that I'm willing to spend with you. What are you going to give me for it?
Right.
That's really the conversation now.
Right.
That's a good point. You know, can I say something about the value thing? I want to say that, Felicia, when you said the value, and also, Sheree, you said something about areas of blockchain, where Black people can really dominate. Okay, I'm going to say this, and I know some people probably watching will say, okay, that's just completely absurd. But still, okay. Now, and I'm saying this, listen, we see Jack Dorsey. Jack Dorsey is very much involved with Bitcoin. And he's in Africa pushing mass adoption and that sort of thing. You can see, whatever you want to think about it. He's very, very, involved with, with Bitcoin. Of course, we see with Square App and their integration, Cash App, and their integration with, with Bitcoin. I'm going to say this, okay? Because I believe that eventually Twitter will be the first platform that will be really, truly decentralized, where you will get to a point where I believe that you will begin to, even own your tweets and be able to even monetize your tweets themselves. Does everybody remember how much value Black people delivered to Popeyes?
Yes. With
our engagement of tweets and the memes that were created. I forgot what the number was.
$26 million.
How much?
26 million of free publicity.
Of completely free publicity that was delivered. That went from one side straight to the other. And those people who did all of that got nothing in return. I'm saying this from that eventually, and I do not think we're far off in this, where those memes that we create, where it's our own intellectual property, our own thoughts of, me taking a picture of myself or my kids and we're doing something and I put some funny caption to it and everybody loves it and then they go and they share it or whatever. And I believe that is going to be monetized and that value for us as the primary culture drivers. This is to be honest, Black people really drive the culture more than anything, especially on these social media platforms, that we could completely dominate that space. And I'm looking at people, and Talisha, we kind of talked about this in the Real Business Blockchain. I like things that have a very low barrier of entry.
Yep. Do what you already do and just get rewarded for it. That's
it.
The smallest thing is going to make or break this. Like I said, that's going to be those things. And what a wonderful way you're using that medium already.
Yeah.
Just using it. And this is where I think it is also the change. It's not monetization at this point. It will be tokenization.
Right.
There won't be any fiat related to it because, again, it's within that ecosystem. And what you do within that ecosystem will then garner you whatever you need. So if it's something that you want to purchase through there, if you want to, get a different profile, skins, whatever that may be, that's where we're going to see it. Until we can actually take it out of that, that's where I think the growth will happen when you can take it out of that ecosystem and then use it somewhere else. Then we have the monetization piece. But that tokenization piece will truly be the link that will start that over and over again. And those low barriers of like, yeah, I just did it. Like I said, the gas points that we talked about, you just go get them. You didn't even know, you shop, you do whatever, but they accumulate. And then you get to see something outside like, oh, I have this. What does this mean? Now you can decide what that is. You can assign that value of whatever that means to you and how you want to use them.
Right.
I couldn't agree more. And the fight in this, and I'm telling everyone now, when we see this happen, remember, this is going to be the fight that you're going to need to wage the war on this. We, as a people, everyone, we will decide the market itself. It won't be someone else saying, okay, you created that meme, it got 100,000 likes, okay, so we're going to pay you $5.
Yep.
You know what I mean? It won't be that way. It will be us deciding itself, that we decided, no, this is a value that we're willing to, the value.
Token will be just that. You decide the value. Once you get that token, now it's you. It's
Right.
like I said, if you want to exchange it and say, well, how much do you want now? Do you want me to create another meme for you? Well, you need to give me 1 million tokens because my other one did this. So you are now, that's where the decentralization and the peer-to-peer portion comes in, because now you're available to say, I can have a conversation with you about what we want to exchange. I don't need an arbitrator. I don't need anybody to tell me. We're just in the same ecosystem. So all we need to do is just agree on what it is within this purview, and then we can do whatever the hell we want to do.
Yeah.
See, that's exactly right. Because if you look at it, and this is why I say, you know, history, life comes at us very quickly, but we have to learn very quickly too on that. And so we look at it, you know, YouTube. Okay, YouTube tells you what the value is going to be.
Right.
It could be like, okay, great, this cat video I did had 100 million, you know, views on it, but YouTube has a rate that they say, okay, well, this is what we're willing to pay you.
So they create, and that's for the centralization. They can get
Yes,
to decide that value and what happens. And also, this is another aspect of branding. I know we talked about this just, you did a video with a gentleman about branding for yourself, how to create a brand. This is where we'll have to look at each other as business. Anytime you're interacting with the world, you're doing so as a business. So therefore, there's a variety of things that you can leverage out here, and that could just be you. This is my brand. I come to this platform like, hey, what are you instantly going to do for me? Because I'm coming to you, I'm going to bring you value because I showed up.
Right.
There's a different conversation than, oh, begging, you know, getting out of Facebook jail. You know, like, things like, you know, like, why are you begging somebody? Like, I'm here. You don't have money unless I'm here. So you're going to compensate me just for my presence. And then anything above that, we need to negotiate each and every time I create some content, each and time I engage. There's going to be a lot more conversation. And this is where that peer-to-peer, we are no longer kind of that unilateral, this is what you need to do. You have to hit these benchmarks to do this and that. And if you don't do it, then you're in jail. If you don't do this, you don't get compensated. That paradigm will go away very quickly. And unless they create something that incentivizes people and that token means something, they don't have a business model. So everybody's going to have to scramble for that. That's no longer going to be like, oh, that's just where everybody is. That's not where everybody is. I need to know where everybody's getting compensated. That's where everybody will be.
Right.
Yeah.
Right.
So, I mean, we're starting to see the erosion of centralization in everything, looking from the economic climate now to, you know, people are dependent on what's happening on K Street, i.e. Washington, D.C., K Street, you know, as to whether they'll be able to keep their homes and, you know, put food on the table, etc. We're seeing a lot of different industries from the music industry. So Eric can attest to this. The music industry, there was a time when if you didn't have a big label pushing you, put millions of dollars into you, then you couldn't make it. Now you have people selling 20,000 copies of their indie, you know, project directly to a fan base through YouTube videos and Patreon and, you know, I don't know, OnlyFans accounts, right? You know, etc. Everything that we see is moving to decentralization, which was part of what I showed you about the crowdfunding. Financing is moving to decentralization. You know, education. People at one time thought, if I don't go to get, you know, this 4-year degree, then I'm not going to make any money. Now it's, can I take a quick certification for 2 months and I can get $60,000 to $80,000 starting salary. So I wrote here in, because people can't see it on Facebook, I wrote here in Zoom, as Eric was talking about Twitter, I'd say be careful and watch Twitter. Twitter needs to do something to get ahead of the curve, because right now it is, from a business point of view, from like revenues coming in, Facebook, Instagram, YouTube are dominating Twitter. What saves Twitter is, you know, Trump and people getting on Twitter and doing all sorts of stuff there.
Fire hose of information, that's what saves it.
Yes, yeah, we're just saving Twitter right now. However, I believe that Twitter is asking itself, what do we need to do to position ourselves so that in the next 5 years, we can be at the front of the pack instead of behind the pack?
Correct.
So what Eric talked about was the technical point of view. I'm giving you what I believe is the business point of view. They need a new business model. And doing DeFi is, in my opinion, I could be totally wrong here, but I think that this is their strategy to say, how do we get in front of Facebook, in front of Instagram, so that people can feel like they aren't in Twitter jail, so that you could have, you know, various people, you know, on Twitter and not having to worry about being censored and all of that. So,
I mean, they've always struggled with a business model. This would at least give them a strong, innovative business model that they could go a long way with and definitely beat out the competition. Because as we see, we know that Libra isn't coming yet. And that it ain't coming yet, so it got time.
Even if Libra came, we did a whole breakdown, and anybody who's new, we did a whole breakdown of Libra and the holes in that and how centralized it was.
And that's why, exactly,
what Twitter is offering is something that is decentralized. I encourage people to take a look at that. Again, we talk about on-ramp, off-ramp, you know, all of the new jobs that are going to be created. So I always refer to this. Roland Martin had a guest on several months ago. Black people are going to lose 4.3 million jobs due to artificial intelligence. Blockchain is probably going to take more jobs out, you know, et cetera. We need to get retooled and we need to get retrained. And one of the best ways that we can do it is to be the on-ramp and then get other people involved in this industry. So, you know, we are within Black Blockchain Consultants looking to do some things in 2021 to really start sounding the alarm, because people are going to need what we're offering, which is hope and new opportunities. And there were jobs last year that didn't exist that exist this year because of the pandemic. There are going to be jobs that exist in 2025 that don't exist today. And you know, I'm just a big proponent of that. So, yeah. Talisha, Eric, do you have any final comments before we end tonight's stream? Great conversation, everybody.
Yeah, I'm just going to say once again, you are only, you know, restricted by your own mind's limitations when it comes down to tokenization. This thing is as vast as the ocean is. You know, and so at the very least, just like you just said, Sheree, just make yourself aware, dig in deep, have conversations like we have, you know, within Black Blockchain Consultants. And yeah, just I want everyone just to get in and so they can prosper from this.
Yeah, Talisha, any final comments?
I'd say Monday is a great example of, you know, having these conversations, kind of really stretching the mindset of what you do. So again, we're having, I think it's 7:30, you said, right, on Monday?
7:30 on Monday, October 12th. Yes, we're having a virtual incubator mastermind. Come to the table. If you have to be a member, I'll put the Zoom link in Flock, and I'll also send it to all of our BBC members. And the idea is to come together, figure out either a project you're working on, we can talk through that, or if you're, you know, thinking about what you want to major in and you want to talk about that more, how to set up your businesses. I want everybody within BBC to be making six figures in the next 2 to 3 years. Nothing would make me happier than that, you know? So Monday is a great opportunity, 7:30 p.m. to come and be a part of that. And if you're not a part of BBC and you want to be a part of that and all the other stuff we do internally, go to blockchainstudies.tech, blockchainstudies.tech, and you are able to become a member there.
Yep, that's, I think, Percy, I know you like smart contracts, and tokenization goes hand in hand. So it's not like you have to choose, it's an and. You can do smart contracts and tokenization as they kind of all work together. But I think that's, yes, you can double major.
You can double major. I'm just always scared with that because I wouldn't want people to say, I'm going to major in biology and social sciences,
Yeah.
right? So just make sure that whatever you choose to major in, it's still manageable. That's the only thing I would say.
Yes, but I think this is a great time for the thought process, because again, this talking it out, you get to see, like, it may sound kind of awkward because it's not built yet. That's not how we do things, but we're not trying to rebuild something. I think that's the key essence of looking at all of these technologies. It's like having the conversation about the internet before the internet was built. You couldn't have the conversation about Amazon or Facebook ads or being a manager, or like any of those things couldn't happen because you couldn't conceive of the thing.
Yeah.
Now you have to be very much preemptive in that thought process. And now we are able to talk about these things because now we see where we've traversed some things that just didn't even happen and can come up to, come up to the top. And now we can look at it and say, okay, this is possible because we can do this, or we can maneuver this way because now we have this platform to do it in. So I think that's where I really stress to kind of stretch out your mindset and not limit you're trying to recreate the wheel, because we're not on the road right now. We're flying in the air. So if you can kind of conceptualize, like you don't need rubber on the road at this point. You need something that glides. So think about it that way.
I like that.
Yeah. So final thing, Kelly in Facebook saying, I missed the convo. I just did my first digital notary on a refi last week. Congratulations, Kelly. So proud of you. We had a lot of convo in Facebook tonight as well. So I want to thank everyone there. Thank everyone here in Flock. Have a great evening. And for those of you who want to come on Monday, we'll see you then. Take care.
Have a good night, everyone.
Good night, everybody.